Marta, is the widely expected rotation trade, is the broadening out finally happening in 2026? Should we trust it?
Well, listen, I do think it's happening, but I'm not sure it's going to be quite as profound as people think. They're making two arguments. One, that we're going to see broader earnings, and I think you can make that case just from a cyclical perspective. Two, that we'll see some improvement just based on valuations. I think the valuation argument is actually a bit shakier. Everything is pricey.
So what are your thoughts on the Mag 7 going forward? Eventually, if we're going to see a broadening out, their presence in the indexes is going to have to come down somewhat.
The expectation, if we do see some of these other companies perform from an earnings perspective, is that maybe there's a little bit more evenness between the Mag 7 and the rest of the market. But I guess when I look at least some of the underlying members of the Mag 7, I think that there's opportunity there from a valuation perspective, and they still have some earnings momentum. So I wouldn't count them out.
So how should investors and advisors approach AI?
Okay, so with AI, I think what we're looking at is a very prolonged building cycle. And I think that creates natural moments of doubt where we're looking for where is the payoff for all the spending that we're seeing and all the time that it's taking. And so what I think people should do is look at these moments of doubt, these periodic periods of malaise, as opportunities to actually buy into some of these AI names on the cheap.
You know who creates a lot of moments? President Trump.
Yeah.
Some are full of doubt, some otherwise perhaps.
Yeah.
So what are you looking for when it comes towards politics in 2026? Because a lot of the news comes from Washington, not Wall Street anymore.
It's been really fascinating to see how much Washington has dominated the market's conversation in President Trump's term. One thing that I think people need to keep in mind is that there's two types of headlines when it comes to Washington. There are these geopolitical headlines that they might create volatility, but they're not necessarily changing the trajectory of the market. And then there are some headlines that are getting a little bit closer to fundamentals. These affordability headlines, anything that's changing the cash flows of the underlying businesses, those are the headlines I think investors should watch.
One of the biggest components of the bull case has been that rates are going lower.
Yeah.
However, we've had a few Fed rate cuts already, and President Trump wants more. Nevertheless, the 10-year has gone up. It was at 4.1%. Now I think it's closer to 4.3%.
Yeah.
So is that going to undermine the bullish case?
Well, I think that when we think about lower rates, we tend to expect lower rates across the curve. When we look at historical cutting cycles, you do see that. Maybe not as meaningful of lower rates at the longer end, but they do come down. We have not seen that this cutting cycle. I think it's harder to look to monetary policy and expect the same kind of economic stimulus that we have seen in past cycles.
So finally, how should your clients, how should investors invest in the environment that we just discussed?
Well, I think it's a really good time to be opportunistic. We are getting some dispersion in how markets are behaving. That's allowing for investors to look for those areas that have been left behind. I think AI is a time for individual stock selection, and I think we can look to some of these areas of the market, like healthcare, as a bit more defensive and maybe a bulwark for a portfolio when things get a bit shaky.
All right, well, thanks for coming on and talking about it.
Yes, my pleasure.